Like I mentioned in my last video, there is concern that we may soon hit a home pricing ceiling, meaning that home prices continue to rise, but they're getting so high that first-time home buyers may not have enough cash to make that down payment on the home. This is a concern of Freddie Mac, a government institution that buys discount mortgages from banks. Like I mentioned in my last video, home prices are not exactly like stock prices. They can't just infinitely go up for a few reasons. One reason is that people can split stocks. You can't necessarily do that with a home. And also, home prices can only go as high as buyers can afford them. And it looks like there's some concern that we may be reaching those limits pretty soon. Now, if home prices continue to rise and they get so high that there are barely any buyers who can afford them, this will lead us with an excess in inventory, meaning a lot of homes for sale. When those homes sit on the market, there's a lot of people selling the homes, but not a lot of people available to buy those homes. That could actually decrease the prices of homes. These are some of the normal fluctuations of the housing market and any market, and we may see this in the near future. Like I mentioned a little bit early, those interest rates are incredibly low, and that's driving home prices high. To put this into context, last year, mortgage interest rates were roughly about 3.68%. The same time this year, interest rates are roughly at 2.77% for a 30-year fixed rate mortgage. These low rates have increased home prices dramatically. For example, the home that we bought a little bit less than a year ago was $390,000, and right now to this day is estimated at $460,000. That's a $70,000 increase in home value in just under 1 year, and is about 20% increase in home value just under a year as well. This explains why it is such a competitive market for first-time home buyers out there right now. Many people are taking advantage of these low rates. According to the MBA, the Mortgage Bankers Association, 3.9% more people are applying for loans this week when compared to last week. Now that's a very aggressive increase in people applying for loans within a very short period of time. The number of refinance applications have increased 79% when compared to this time last year. That is a huge increase. A lot of people are refinancing. In reaction to these low interest rates, buyers are panicking and running out and getting approved for a home loan in mass numbers. There's two reasons for that. Reason number one is that buyers don't want to miss out on these incredibly low interest rates. They may never be this low for a very long time, and those low interest rates mean a low monthly mortgage payment on their home. Reason number two is so they're ready to buy a home before home prices climb even higher. If the home prices get higher than they are, they may not have enough money set aside for a down payment on a home, so they don't want to miss out on that opportunity to get their foot in the door. It is true that interest rates are dropping and home prices are increasing. When you or a family friend are looking to buy a home, remember, this is not an investment. So unless if you want to put tenants in there and you want to rent the place out and you're looking to rent it for a profit, don't worry about the fluctuations in the market. If the home price is affordable and those monthly mortgage payments are comfortable for you and your family, go ahead and purchase it. If not, then just wait, your opportunity will come. These things go up and down. It's the natural flow of a real estate market. And right now things are very high. Now, if you already haven't done so, I strongly suggest that you subscribe. That way you'll keep getting home price updates and you'll be the most informed to buy the best home for you and your family.